And then we're off. Good evening, ladies and gentlemen. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the ride for a safe, predictable, and consistent 1% per week, using nothing but pre-qualified dividend stocks. And those, my friends, are companies that have consistently increased their dividend payments to their shareholders. This way, one way or the other, absolute worst case scenario, you're getting a higher and higher dividend every single year. Well, that works for me. I'm retired, so I need to make sure that my money is safe and consistently increasing year after year after year. Because, after all, we are humans, and humans are the only species on the planet that actually have to pay to be here. So the money's got to come from somewhere. Okay, so my money comes from dividend investing for weekly cash flow. Darwinley, how are you today? Hustling daily. Whoa. Darren, Steph, Bill, how are you all today? Got me a heavy duty drink tonight. All right, so let's take a look. Now, we've been saving up stocks for the last 2 weeks to see what is going to be available for next week, which is tomorrow. Now, tomorrow is week number 12 for the third quarter. So it's week 12 for the third quarter. So that would be week number 38 for the year. Mark, how are you doing today? Mason, Glam, Gran. That's a cool name. Uncle Kenny. What's happening? So, Kinky, interesting name. Some of the comments in this live were filtered to protect the community's experience. Well, that makes kind of sense if you think about it. And I think it's time for a cough drop. All right. I'll tell you, getting old is not as much fun as they make it sound. Eddie, how's it going? I can't. Mary. Rob Bolter. Interesting name, Rob Bolter. Kalki Dan? Is that right? Kalki Dan? All right. About the Chase 75. New here. You don't hold stocks long term, but don't you have to hold dividend stocks long term? No, you don't. A dividend stock, you only actually have to own 1 or 2 days in order to collect a dividend. But it all depends on what your trading strategy is. What are you trying to get? What is your outcome? Okay, and don't just say you want to make money. You want to make money, grab a stack of newspaper, stand on the corner. Well, now you're making money. All right. If you ask a better question, you're going to get a better answer. Okay? If you're just here to make money, you're asking the wrong questions. Nasir, how are you doing there, Nasir? Joel, how you doing? Alfred Genius 88. About the Chase. Got it, thanks. Austin, we need you to take care of yourself, James. Well, you know what I did today? Today I went out bright and early this morning. I went and played some soccer. Oh, it was fun. Get out there with the guys, kick the ball around a little bit. Yep, worked up a big old sweat for a couple of hours. It was fun. Most of the people there were in their 30s, 20s, 30s. And there was a few of them in their 40s, but there's only like 2 or 3 of us in their 50s and 60s. We actually have a retired general. A retired general is playing soccer with us. Yeah. Anyway, here's what it is. Nasir, good to hear. What was that, Flipper? Uh-oh, I got to go back a little bit. Flipper, how you doing today? What is the strategy of covered calls? MZ Everlast. The strategy of a covered call is you're actually buying a good quality company. You're selling the rights to someone else to buy it from you for the exact same price you paid for it. Now, let's say hypothetically we're looking at AT&T here. Well, it's up, so we'll take a look at it. If I buy AT&T tomorrow morning, this is the price I'm looking to buy it at, $21.63. Okay, so once you buy, what are you showing? Right now, I'm showing AT&T. I'm explaining to, who am I explaining this to? Zeverlast. If I like AT, remember, number one, never buy a stock you don't like. You like AT&T, great, fine. I'm just using this as an example. It's not a recommendation. AT&T is at 21.63 at this moment in time. They've been in business for over 100 years. They ain't going anywhere. 21.63. Hypothetically speaking, if I buy it tomorrow morning, I can sell it to someone else. Uh-oh. I see what this dude had to say. You look like that dude from Back to the Future. Oh boy, I don't know which dude that is. There's a lot of dudes in Back to the Future. I wonder if you're talking about George, the dad. Yeah, he's an interesting character. Anyway, if I like AT&T and I want to buy it tomorrow morning, 21.63 is what I'm going to pay. Now, what I could do with a covered call is I can, after I buy that, sell it to someone else for a covered call. Basically, I'm selling them the right to buy it. They don't have to buy it. It's just the right to buy it, which means they can buy it anytime between tomorrow morning and Friday afternoon when the option expires. Because it's a weekly, I do weekly options. Okay, so I buy it on Monday, sell it, and sell by Friday. That's my ideal. Jump in Monday, get out Friday. Now the option is going for 29 cents a share. Well, that's over 1%. I'm looking for a safe 1% every week. So if I buy it at 21.63, sell someone the rights to buy it from me at 21.50. Could you tell a meme coin to boom? Yeah, sorry, dude. No, I don't do coins. That this should anytime between tomorrow morning and Friday afternoon. If it goes up, yeah, they'll buy it from me. If it doesn't, I'll keep it. All right. So that is the idea. We're looking to use nothing but good quality companies. Now, I consider AT&T a quality company. They've been around for a while. They're going to be around for a while, you know, and they pay dividends. Now, the dividends increase every single year. Brandon, how are you doing? Whoops. There you go, Brandon. That's okay. You can keep it. Well, alrighty then. Thank you very much. So that being said, that's what I'm looking to do. Just covered calls. All right, old school brother. Thanks for getting it straight. No Z. All right. Whatever. Okay. I don't do coins. I don't do cryptocurrency. Nah, 4% gains are not cool. I do 1,500, 18 months. Okay. Let me see that again. 4% grow are not cool. I do 1,500%, 8 out of 12 months in crypto. Get with the times. Your investors already learn stocks from grandpa. I love it when little whippersnappers. Okay, you know what? I'm a grandpa. I'm going to call you a whippersnapper. And I'm a grandpa. And I'm teaching about stocks. Call me an old timer if you want. I want to save predictable, consistent 1% per week. That's over 50% per year. And just to let you know, cryptocurrency, you can make as much money as you want with cryptocurrency, but you can't take it and buy a cup of coffee with it. You can't. You have to convert it back to cash. Okay? And cryptocurrency does not have the time. Yeah, I don't think he's correct. One thing I don't like about cryptocurrency, besides the fact that you cannot use it to pay your bills here in the United States, there's always going to be people, but you definitely can lose it quicker. Yeah, in cryptocurrency you can. All right, so I don't do cryptocurrency, so more power to you. All right, that being said, let's keep on keeping on. All right. So hopefully that explains AT&T and what I'm doing here. How old am I? I'm 60. I don't know what that has to do with anything. Simone, how are you today? Indian stocks. No, I don't do Indian stocks. Sorry. All you do is sell to an exchange and it's converted instant coin. Yeah, I get that. Do you have kids? Yes, I have kids. All right. Sit, put, fill a rip. I have no idea what that means. DJT, no thanks. Minty Fresh, AT&T, we just looked at that a minute ago. You think 1 year leaps to buy is a good move? Flipper, I tried it this year. It just didn't work for me. They go up, they go down. Yeah, for 1 or 2 weeks, it's great. But here's the thing. The leaps expire and the near money strikes expire also. Which is my favorite dividend stock? That would be Macy's. Which column used to sell in the option chain? Oh, Neverlast. If you take your cursor, okay, see your little cursor right there? That's how it moves around. And if you move it over onto this column, see where it says buy? And if you move it over to the other column, it says sell. Okay, that should answer your question right there. 1UP. I think bro's got work ethics. Alright, anyway, let's continue. Okay, Juan Garcia. What is your favorite dividend stock? That would be Macy's. Best stock for Roth IRA. Why are other guys saying 1,500% was incorrect? I've done it several. Okay, there's nothing wrong with that at all. You know, not many, but I've done 100Xs. Yeah, I'm sure you have with cryptocurrency. There's a lot of cryptocurrencies that come in, go through the roof, and then they disappear. Yeah, sorry, I don't do that. All right, I don't do something where someone is going to lose. Thoughts on STW 25 to 50 base? I have no idea what he's talking about. Oh, Tanner, best stocks for IRA. In your opinion, I already have a separate portfolio with VOO, VTI, and Spider. Alright, so Tanner, just for the fun of it, I don't do coins. Please stop with the coin things. You're definitely in the wrong place. I do dividend stock investing only. No futures, no crypto, no Forex, none of that. Dividend stocks only. Alright, so Tanner, I'm going to pick on you for a little bit. Only because, number one, you're new. Got to pick on the new guy, make him feel welcome. You know how that goes. And this is just, I'm not giving you my opinion. I'm showing you factual numbers, and then you decide for yourself. Okay, fair enough? Now, I don't like VOO, I don't like VTI, and I don't like SPY. Because my basic theory, for that sense, I sell in the crypto for Taco Bell stuff. Yeah, you can do whatever you want, dude. I don't do financial advice. I don't give anything. Just my opinion. You're welcome, tough one. All right, so Tanner, you ready? Now, like I said, Tanner Payne, you're new here, so you don't know that I've been doing this live thingy every night since January 2nd. How long do I hold stocks? About a week or two. That's about it. Tanner, I've been doing this live thingy for about 9 months, since January 2nd. Before that, I did videos on TikTok for about a year. Before that, I have YouTube videos since 2012. Okay, so I have videos on YouTube that go all the way back to 2012. The videos I have on TikTok, they go back for about a year. And these live situations here, where we are right now, well, those only go back until January 2nd. So I haven't even done a full year here yet. But you don't know, you're new, so let me show you my opinion. Okay, my opinion, or the way I do things, I'm looking for a simple, safe, predictable, consistent 1% per week. And I know 1% a week doesn't sound like a lot, but if you compound it over the year, that's 62% per year. I know for a fact VOO, VTI, and SPY do not offer that. I like stocks, but I have $1 million already. I do both now, but I want to make blah, 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 target ROI, blah, blah, blah. Just 1% a week, dude. That's it. 1% a week. It's simple. It's easy. It's quick. I don't have to sit in front of my computer all day. So let's take a look at these three. First of all, VOO. VOO does have weekly options, which I like because it allows me to do a covered call for 52 times a year. Okay? 52 times a year. Okay? That's VOO. Next one, VTI. VTI. VTI also has weeklies. Good, allows me to do that. But SPY also has weeklies. Oh. So we can do weeklies with all three of these. That's a good thing. But here's where it gets a little bit uncomfortable. So we're going to go over to Yahoo Finance. And we're going to take a look at dividends. Now, I like dividends because they share it's the profits that the company shares with the investors. So as an investor, I want to know how much money am I getting on a consistent basis, part of the dividends. So here we are first looking at VOO. Now, VOO has only been paying dividends for 14 years. I personally like companies that have 20 years. To live on 1%, you'd have to be a millionaire already to invest. I respect your theory now. I'll sit and listen. Okay. All right, so hypothetically speaking, with $1 million, you think I need $1 million? No, I don't. Okay, I can live very comfortably off of 100,000. Because 100,000 is $1,000 a week, which is $50,000 a year. I'm 60 years old. What kind of bills do you think I have? NFTs are the biggest scam. Yep, probably. All right, so let's finish up what we got here. So here's the dividends. They've only been paying for 14 years. Okay, fine. Some people like 10 to 15 years. 56, 53, 54, 57. Look, they go up and down. Okay, 57, 58, 69, 57. That's going backwards. 64, 69, 97, 67, backwards again. So the dividends aren't consistently increasing. They go up, they go down. They go up, they go down. They go up, they go down. It's kind of okay. Because they are consistently having them. 109, 101, 95, 88, 131, 101, 118, 108, 116, 121, blah, 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 blah. Slowly increasing over the years. Okay, fine. But that's not what I'm uncomfortable with. Okay? You think by getting those dividends, okay, this is what it actually comes to. All right, you ready for this? And this is why I don't like it. 1.28%. So you're taking your money, $513 a share. $513 a share, and you're getting a 1.28% for the year. Do you understand what that means? Okay, you're getting 1.28%. Okay, inflation is, what is it, 3 to 5%? So you're losing money every single year with VOO. Okay, you're losing money every year with VOO. Now, let's go take a look at the other one. Take a look at the other one, VTI. VTI. Now, VTI is paying 1.32%. Same thing. You're losing money every year by investing in these two stocks. Okay, let's take a look at SPY. SPY. All right, SPY is paying 1.2%. So you're taking your money in a Roth IRA. I understand it's not being taxed. Gray matter, how are you doing today? I understand it's not being taxed. Fine, whoop the deal. But you're only making 1.2% on all three of them. 1.2% on one, 1.238 on the other, and 1.27. And you think that's good? I'm showing you how to get a simple, safe, predictable, consistent 1% per week. Yes, it's going to take you 10 to 15 minutes every day. Okay? 10 to 15 minutes every day, but that's going to come to 50 to 60% at the end of the year. That is a huge difference between 1.2% and 50 or 60%. Now, I'm not quite done yet. Now, that's spiders. Let's take a look at how the dividends look for the spiders, because we haven't seen those yet. Dividends only. We'll look at all the dividends. Now, the dividends was the dividends for spiders have been quite consistent, for more than 20 years. So I'm not going to worry about that too much. Let's just go back a little bit. All right, to 94. Here we go. 27, 31, 29. It's going backwards. 36, 27, backwards again. 32, 31, backwards again. 38, 29, backwards again. 35, 37, 30, 35, 38, 31, 39, 32, 41, 37, 35, 37, 45, blah, 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 blah. If you'll notice, the spiders, they go up, they go down, they go up, they go down. No consistency whatsoever. Hi, I'm new. Hey, Mike Huffy. How are you doing? So spiders keeps going up and down, no consistency whatsoever. If you or I, would you want to collect 1,000 shares, blah, 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 blah. Okay, interesting. No consistency with the increases. They go up, they go down. They go up, they go down. Up, down, up, down. Now, when you get to a certain point in life, like retirement, because it's coming whether you want to admit it or not, if you're not consistently increasing every single year, you know what does increase every single year? Taxes and inflation increases every single year. So if I'm making $1.02 1 year, great, wonderful. But the next year, I'm making 69. And then the year after that, 84. Then 98. Then I'm going back to 83. There's no consistency whatsoever. Okay? I can't deal with no consistency. All right, let's look at VTI because we already looked at VOO. We looked at Spider. Now VTI. What do those dividends look like? Okay? 2001, which means 23 years of increase. Okay, cool. 14, 16, 20, 15, 13. Is this doing the exact same thing? 14 to 16, that's higher. 16 to 20, that's higher. Right? From 20 cents to 15, that's a reduction of 25%. How does that make you feel? If you're taking your money and you're investing it into something, and they're giving you a certain amount, and then the very next year they cut that by 25%. I'm not sure how you can be okay with that. Okay, so apparently, this is just a guess, that whoever sold you these, or whoever advised you to buy these, didn't really go over the numbers with you, didn't really tell you what you're getting into. Because just for the fun of it, let's pull up a couple of stocks. MSFT, Microsoft. All right. Now, just for the fun of it, look at Microsoft. Okay, 2003. Okay, 816, 8308. So here's where the consistency starts right here. Okay, it goes from 8 to 9 to 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, blah, blah, blah. Consistent every single year, higher and higher and higher. So 1% would have to fire my advisor and sell BMW. I'm talking about 1% a week, dude. 1% a week is over 62% a year. No advisor gives you 62% a year. That much I can't guarantee it, but I'm pretty damn sure. Okay. So anyway, Tanner, I'm going to finish up with whoever sold you or whoever told you about these, great, fine. If you do not really care about your money, because you cannot tell me that inflation has not increased. You cannot tell me shit is not more expensive now than it was 4, 5, 15 years ago. Okay? Yes, top 62% a year. Okay, you know how to add, compound. 1% per month compounded is 62% a year. Alright, so apparently someone's not telling you everything. Oh yeah, stocks, you're right. That's extreme profits. No, it's not extreme profits, it's consistent profit. There's a difference between extreme profits and consistent profits. Thoughts on STWD? I never heard of it. And usually when I say, oh, I've never heard of it, that usually means it's going to be a no. 62%. Hey, David, how are you today? All right, so let's go back and look at STWD. Sarah, I'm guessing you're a trillion. Oh, thanks for being patient. I'm learning. Okay, no problem. And I forget who said that, but apparently, under the assumption of whatever you're under the assumption of, STWD. STWD. Okay, that's going to be a no. Who said that one? So, I use to 150% in 3 days. Well, good for you, David. What are we talking about? David, what we're talking about is investing for a weekly cash flow. Safe, predictable, consistent, 1% per week. Hello, do you have cool content? I'm going to read these questions. Sorry, guys. Stocks, yes. Is the ruble okay? I don't do cryptocurrency and I don't do forex, so I can't answer that question for you. So this question is for the Modern Mystical Monk. STWD is going to be a no. It is a monthly optional stock, which means I can only do an option once a month. Why is that open? Okay. But I'm learning. I'll diversify after my next 15x. Oh, good for you. Is the S&P 500 good? No, it's not, Dave. Slavery ended 148 years ago, and now it has taken part of the act together. Yeah, sorry, slavery is still alive and well. Slavery ended 145 years ago here, not in other parts of the world. Okay, so if you're going to spew some things that you think are facts, then spew them the proper way, please. All right. Let's keep going. Hey, Doc's here. David, I've had 40 grand in savings account for a year because I don't know how to invest it. How long does it take to get your act together here? Well, let me explain it to you this way. This strategy that I am teaching you here for free, no strings attached, was created for a 9-year-old little girl, my daughter. In 2008, she said, Dad, can you teach me what it is you're doing?
Hi, I'm Tracy, and as you being part of my internet website company,
See, she almost looks just like me.
That's what I do. Being part of that.
I laugh every time I see this video. That's me 12 years ago, teaching my daughter. Now, the whiteboard in the back, we actually had to do a dividend calendar, long form. You know, we have to draw it out and do all that kind of nice stuff. It was a pain in the butt, but we did it anyway. So, that being said, I forget where I was even going with that part of the conversation. Oh, yeah, so it was created for my 9-year-old daughter because she wanted to know how to trade. All right? At 9 years old, it had nothing to do with being a girl or being a boy. Nothing at all. Just a 9-year-old kid. Perfectly normal. Nothing wrong with her at all. Okay? So, at 9 years old, it had to be simple. It had to be safe. It had to be predictable. It had to be consistent. And there had to be no way that she could lose. All right? That's the 5 criteria I had to come up with for this trading strategy. Okay, so number 1. Here's the rules. Never buy something you don't understand or doesn't make sense. So the gentleman I was talking to earlier, he has 3 items in his 401k. All right? So he's got VOO, VTI, and Spider. Okay, each one of those is paying less than 2%. Yeah, less than 3%. 2.13, 2.12, and 2.7 something. Anyway, VOO, VTI, and SPY. He has these in his account, but the numbers just don't work. Why would you invest your money and get a 2% return for the year when you could get 1% every week? Hey, how you doing? You could get 1% every week, and that comes to over 50% every year. Okay, yeah, it takes a little bit of time, 10, 15 minutes every morning. So you add a little bit of something to you. Okay. If I had inside info on 300% short, yeah, sorry. What was I saying? I get interrupted with the questions. I got ADD, and I got 5 screens going. It's hard to keep up with all these questions. All right, so as I was saying, so at 9 years old, simple, safe, predictable, all that kind of stuff. So rule number 1, Richard, how are you doing? Never buy something you don't understand. Okay, why that gentleman bought spiders VTI and VOO is beyond me. Because, yeah, they pay a quarterly dividend, but it's not consistently increasing every year. It goes up, it goes down, it goes up, it goes down. When you're retired like myself, well, you got to budget your money to spend it properly. Yeah, tough. It's really not that difficult. Don't make it more complicated than it needs to be, dude. Okay. So being retired, you don't work anymore. See, when you're working, it's great. You know, all right, hey, we need a couple extra bucks. All right, let me put in a few more hours at the factory, a few more hours here. Let me make another deal. No, when you're retired, you're North Sentinel Island. Good for you. So when you're retired, you have to have consistency with the amount coming in. Because not working anymore, well, you have no cash flow. So cash flow is going to come from your investments. And if your investments are up, down, up, down, up, down, well, how can you live with inconsistency? It's just frustrating. Okay, so this year I got $1,000. So this month I'm making $1,000. Next month I'm only making 800. Next month I'm only 7. Now I'm making 1,200. All over the place. Yeah, see, that doesn't work for me. I like consistency, predictability, and safety. Okay, so rule number 1: never buy something you don't understand. Rule number 2, never sell for a loss. It defeats the purpose. Rule number 3, make sure the company is consistently profitable. Now, the thing I like about dividends is that dividend is a share of the profits that goes directly to the investor. Okay, so if the company is consistently profitable every single year, well, that number gets higher and higher and higher. Okay, I showed you Microsoft. Every single year, higher and higher and higher and higher dividends. Now, at this current moment in time, there's 9,642 stocks that you can choose from. That's a lot to choose from. So how do you figure out which ones are profitable and which ones aren't? Okay? So once you figure that out, and it's really not that difficult. As a matter of fact, let's do it real quick because we haven't done it in a while. And for that, I like to go to FinViz, F-I-N-V-I-Z. Now, FinViz, right here. All right. Oh, number has changed again. 9,634 companies. Okay, so it changes every week. So we're at 9,634 companies. Here is where you find out all the information on the stocks. Okay? Index, yield, average volume, target price, sector, float, earnings dates, analysis, blah, 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 all that kind of nice, neat, fun stuff. So how do you find out how many stocks are profitable? Well, you got 9,634 of them. Half of them are going to share their profits with you and me. Those are the companies I like. The other half are going to take all of their profits and put it back into the company for capital growth. It's a huge, huge difference from people who want capital growth and people who want cash flow. So if you want capital growth, I'm going to tell you right now, you're in the wrong place. Plain and simple. I'm not looking for capital growth. I'm looking for cash flow, consistency, safety, and predictability. Because I want it to be the same. Because my bills are basically all the same month after month after month. Once you get to this point, okay, I'm here, fine, I arrived. Now I have to figure out where the money's going to come from week after week after week. Okay, so if I take my little investment and I make my 1% a week, great, fine, that works for me. So, right here, this little tab here, dividend yield. What that's going to do is going to show me which companies and how many companies there are that are profitable and how much they pay out on a yearly basis. So, if it has profits, we go positive, which doesn't mean a whole bunch. Okay, there's 5,458 companies that actually share their profits. Okay, I have no idea what teeth is, other than teeth. Okay, so Cornelius, I'm going to say no because I have no idea what you're talking about. So here we figure out with just a positive dividend, we got 5,458. But let's change that a little bit. Let's say we want to do only companies that have 4% yield. Okay, well, there's 1,804 of them. Okay, now if I wanted to go a little bit higher, I can go over 7%. Well, now we only have 700 of them. Fine, but still a lot. He's not a dentist or a crypto guy. I said it 3 times. Yeah, some people are a little bit challenging with their questions. Yeah, I'm not a crypto guy and I'm not a dentist. Okay, fine. All right, so this will allow to tell me what companies actually have profits and what they share. All right, over here it tells me whether or not it has options, because I like options, weekly options specifically, because I want a cash flow on a weekly basis. So if I click over here to find out options, well, now I'm down to 354 companies that have options and have over a 7% yield. Now, I don't do yields anyway. Okay, I look for monthly cash flow. So let's get out of here. Let's go back to where we were. Right. Now, as I was saying, I don't know anything about this stuff. Can you help me? Seneca, how are you? Yeah, just sit tight. I'm here every single night. Adam, best dividend stocks are ET and RTX. Now, I like ET. I do. RTX, not so much. But just hang out, chill, see what you think, and go from there. Okay? I'm not selling you anything. I'm just giving you information. Joshua, how you doing? All right, so forget where we were. Oh, so once you figure out how many companies you like, I only like about 300. Okay? Now, I like the Dividend Kings. Okay? Those are companies that have increased their dividends for more than 50 years. I like the Dividend Aristocrats. They have increased their dividends for 25 consecutive years. The Dividend Champions, they've increased their dividends for 25 consecutive years also. The Dividend Contenders, they've increased their dividends from 10 years to 24 years. Those 4 lists right there will give you 300 different companies that consistently increase their dividends and have weekly options. Because I want a company that's profitable and I want to be able to profit every single week. It's actually that simple. So let's finish up with the rules. Rule 1, never buy something you don't understand. Never sell at a loss. Make sure the company's profitable. And Rule 4, make sure there's weekly options. Are you doing good on the test now? Okay. All right. And rule number 5. That's funny. Are you short or do you have a giant computer? Yeah, I'm a midget. Anyway, let's keep on going. Alright, so when I say make sure the numbers work, well, let's go over the numbers and see if it makes sense. Okay, first of all, the chart right here tells me where it was a year ago, where it is now, where's the high of the year, where's the low. This is a 1-year chart. Now, charts come in all sizes, shapes, and quantities. I like looking at a 1-year chart, then I like to look at the 90-day chart, and then I like to look at the 30-day chart, and then I like to look at the seasonality chart. Buy high, sell low. It's simple. Yeah. Don't make it complicated. All right. So here, I'm going to go to a different one because I don't even know who this company is. One of my favorites. Here we go. Macy's, my favorite company. Okay, really quick. Every time I look at a chart, remember we're still going over the numbers. Every time I look at a chart, first thing I want to see is where's the high, where's the low. Where was it a year ago? Where is it now? In what direction is it currently going? Now this is a 1-year chart. It tells me on a 1-year chart what direction it's going. Okay, great. Now if I change it to a 6-month chart, total different story. But I'm looking at the exact same things. Where's the high? Where's the low? Where was it? Where is it? And which direction is it going? Okay, then I want to look at patterns. Okay, well look, down, up, down, up, down, up, down, up, down, up, down, up, so on and so forth. Okay. But if you're looking for to increase, that's 2%, a bit more risky. How could I do so? Okay, sit and chill. All your questions are going to be answered. All right. Hey, where should I start with 400? Okay, Audrey, sit and chill. Just relax. We're going to get there. Okay, the stock market has been around for over 400 years. It ain't going anywhere. Okay, if you don't get it tonight, well, there's always tomorrow night. And then there's always tomorrow night. And then there's always tomorrow night. Okay? Yeah, Audrey, yeah, you should be paper trading. Now, I have been paper trading for 20 years. I have 6 accounts. 6 accounts. I share 3 of them with you guys. So you can look over my shoulder and see exactly what I'm doing. I'm not hiding anything. It's simple. All right. After this, I want to take a look at the last 30 days. Okay, that would be 8:15. Right there. Okay. This is the last 30 days, but I'm looking at the exact same thing. Where's the high? Where's the low? Where was it? Where is it? In which direction is it going? Well, now the direction has changed because you see it was going down. But look, right here, Wednesday, she changed directions. There's the 30-day bottom. Now she's going to the upside. I like that. Now, the next chart I want to look at is something that's relatively new. It hasn't been around that long. It's called a seasonality chart. Now, seasonality chart, way off to the left is January 1st. Way off to the right is December 31st. It's one whole year. You're looking at one whole year. The blue line is the movement for this year. See, this is what Macy's has done this year. It went down, up, down, up, down, up, down, up, down, up, down. See right here, we're at the down point, bouncing off. See right there's the bottom right there. Now she's going to the upside. The red line up here, that is 10 years of data. 2014, 2015, 2016, 2017, 2018, so on and so forth. This is what the stock usually does this time of year. And look at right here. Okay, see where we are? Well, right now we're going to keep on dropping, and then in the beginning of the 4th quarter, she's going to shoot up. Well, great. That's information I find valuable that I want to know. Okay, Sohail, you want to be invited to be a co-host? Love to have you. However, DM me with your phone number first. We'll have a conversation. If we're on the same wavelength, fine, dandy. Other than that, I don't know you. I'm not going to subject everybody here to Amway, Bitcoin, Forex, politics. Yeah, no thanks. If I don't know who you are, I'm not going to invite you. But I have no problem inviting people on who want to talk as long as you're on the same conversation. So as I was saying, the red line represents the last 10 years of movement. So it's what it normally does day after day after day. Right? Basically following the same thing. But this here, I want to keep my eye here. So as soon as it hits this area, I want to jump in and take that right up. Tell them about the rate cuts coming, the overall market drop, but before you buy 9K, whatever. Sorry, I don't really subscribe to that kind of stuff. Okay, Macy's is over 100 years old. Okay, they've had rate cuts, they've had bunches of issues for the last 100 years, and Macy's has seen it all. Okay, you think there's something that Macy's over the last 100 years has not seen? Yeah, no, I don't buy it. Sorry, but anyway, here's where we are now. I want to take a look at this area right here because that's what we're talking about at this moment in time. Click left, drag right. Okay, that gives me the next 2 weeks. The next 2 weeks is a little bit of a downturn. Okay, fine. So let's go back to the standard chart. Now, seasonality is great, but it's kind of like you're looking in the rear view mirror. What did it do last year, the year before, the year before, on average? Okay, so what does it normally do? Okay, great. But the current trend supersedes that. So here's the bottom here. Now she's going to the upside. More than likely, she'll probably go up a little bit, come back down, and then into the 4th quarter, she'll probably make that move. So look at history charts, everyone. Okay, yeah. You want to do more work than I want to. What did he say again? All right. Nope. There we go. So look at historical charts. Every rate cut drops. In the micro, you're not. Wait a minute. I'll go back to the questions. YouTube has horrible interactions. You're on yearly zoom in. Yeah, I get that. I have no desire whatsoever. Tell them about the rate cuts. I don't do that now and have a heart. Before they buy now, have a heart attack. All right, down. November, we could see some end of the consolidated terms. Okay, thank you. Rate cuts, blah, 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 blah. Okay, fine, dandy. You know what? You have your trading strategy, I have mine. I don't pay attention to news because news has really nothing to do with some of these companies. If you look at it this way, most of the companies I invest in have been around for over 100 years. Okay? 100 years. What has the U.S. economy seen in the last 100 years? Okay? Over the last 100 years, we have seen World War I, World War II, Korea, Vietnam, the Great Depression, the stock market crash, the oil embargo of the 70s, Afghanistan, Iraq, Iran, the Gulf Wars, all that crap. We've seen Y2K, we've seen the dot-com bust, we've seen the financial crisis of '08, we've seen the pandemic 2021, yet these companies are still increasing their dividends. Okay? So no matter what happens, rate cuts, rate adjustments, this, that, the other thing, those stupid talking heads on TV, yeah, the company's been around for 100 years. It ain't going anywhere. All right, so let's get back to where we were. All right. Viewers. Upstart. No, Upstart doesn't work. WFC. Wells Fargo for Monday. Ooh, I like Wells Fargo. WFC. All right. First and foremost, before I do anything else, very first thing. Here's the high. Here's the low. Here's where it was. Here's where it is. Here's the direction it's going. Look at this big drop here. Now she's bouncing. I want to take a good look at that. But before I do, I want to take a look at these numbers. 52.85. Well, if I buy it at 52.85, the closest strike price is going to be the 53. And the 53 is going for 71 cents a share. Now, I know 71 cents a share doesn't sound like a lot of money. But let's take out our handy-dandy calculator. And 71 cents a share. Cool. Now, what are we paying for the share? Well, we're paying $52.85. Okay, great. Divided by 52.85, that comes to a grand total of 1.3% per week. I'm looking for 1% per week, because 1% per week gives me 50% per year. But 1.3% is going to give me a lot more. Okay, I get that. Okay, Tub? I get what you're saying. I understand what you're saying. And yeah, it makes sense in a different trading strategy. The trading strategy I'm talking about has no whatsoever. Okay, thank you for that. All right, but number one question, okay, Wells Fargo. It's been around for over 100 years. You really think they're going to disappear? Probably not. Okay, so Wells Fargo, if I buy first thing tomorrow morning, sell the 53, I'm going to make 1.3%. But here's the kicker. If she goes up above the 53, not only do I get the 1.3%, I'm also going to collect the difference between the purchase price and the strike price, which is an additional 15 cents. So if we add the additional 15 cents, that's 71 plus 15 cents, well, now I'm walking away with 86 cents a share. Okay, so at 86 cents a share, okay, what does that come to? Well, still divided by the purchase price, 52.85. Well, now I'm walking away with 1.62%. Do I really care whether or not I get called out? No, not really. But here's the main kicker, okay? Is it the right time to buy? Now, just because the numbers look good, fine. But the chart is going to tell me whether or not it's a good time to buy. Because stocks do two things. They go up, they go down. Okay? They don't come to your house, they don't wash your dishes, they don't do your laundry, they don't mow the lawn, they don't even trim the hedges. They don't do anything but go up, down, up, down, up, down, up, down. So, the timing has to be right. Now, I've been doing this every single day for 15 minutes a day. They also consolidate. No, they don't. They go up, they go down. That's it. Up, down, up, down. Do you see any notes there whatsoever say, hold on a second, I'm consolidating? No, they don't. They go up, they go down. That's all they do. Don't make it more complicated than it needs to be. Okay, so I can get into some complicated conversations. We can talk about the Black-Scholes pricing methods of options. We can. We can talk about the implied volatility. We can talk about theta decay. We can talk about the delta. We can talk about a whole bunch of shit. But that's not what this strategy was created for. It was created for a 9-year-old. When I say simple, it means simple. Simple. Okay? Explaining it to somebody in elementary school. Okay? It has to be simple. Never buy something you don't understand. Wells Fargo, I know who they are. I can take my daughter and drive by Wells Fargo and say, hey, there's Wells Fargo. I can go a couple of miles down the road and say, hey, look, there's another Wells Fargo. And I can go to the history book. Look, Wells Fargo started in 1877. And this is what it did, this is what it does, and this is what it's doing. I can do all that. It's simple, it's easy. Don't make it more complicated. Simple, safe, predictable, consistent, and no way to lose. Don't make it more complicated. Okay? Okay, so Wells Fargo's been in business for over 100 years. Great, they ain't going anywhere, so let's keep on going. A year ago, Wells Fargo was at 43. It bottomed out in October at 38.11. Topped out in mid-May at 62.30. Okay, well, let's look at the last 30 days. Okay, 30 days ago, here we are over here at 54.5. It shoots up to 59. Well, here's your top right there, 59. Now here's the bottom. The bottom was Thursday. Friday was an up day. Well, it goes up, down. Now it's time to go up. There's no signs about consolidating. There's no signs about splitting. There's no signs about anything else other than up, down, up, down, up, down, up, down. That's it. That's all they do. Okay. All right, so anyway, I like the idea that she's coming down. She's down here. I like 2 days to the upside after a 30-day bottom. Here's your 30-day top, 30-day bottom. You got one to the upside. I'd love to see Monday morning, tomorrow morning, if they say it goes up a little bit. And if it does, all these numbers are going to change. But the math stays the same. Here's the purchase price. Find the closest strike price. And then you divide the bid, which is what I'm receiving for my contract. Okay, bid by the purchase price, and that will give you your rate of return if it's more than 1% and you like the company. That's the big one. If you like the company, never buy something you don't understand. Okay? All right, now I missed a whole bunch of questions, so I got to slide backwards. Go backwards. Monday, oh yeah, forgot. Tomorrow is supposed to be Black Swan Monday. Oh, lovely. Where was I? Yeah, Simone asked me about Wells Fargo. There we go. So here I am, right here. All right, Rude Dude. Hey, James. Last 4 weeks did over 9%. Keep up the great work. Oh, freaking awesome, dude. Where's my cut? Anyway, can you look at Upstart? Been asking since last night. Yeah, I looked at Upstart last night. I gave you my opinion on Upstart last night, and apparently you didn't like my opinion, and it ain't going to change today. Okay, Upstart is a no. It's that plain and simple, and I don't know how to explain it to you, because you're going to have, there's 9,634 companies. Why that one? Okay, it doesn't fit the parameters. Okay, it doesn't fit the parameters. It doesn't fit into the equation. So why? I got 300 companies to look at. Upstart does not make the cut for me to have 301. Sorry. It's for this particular strategy, Upstart's a no. UPST. Let's get rid of that. Let's get rid of that. UPST. Okay? Now, are you ready? Okay, who said this one? It doesn't even have a name on it. There are no dividends in the time period selected. Upstart is a no. Okay? The title of the show, right there, the title, Dividend investing for cash flow. Dividend stock talk. See the very first word. The very first word is dividend. This company has no dividends. Why the hell am I wasting my time looking at it? Okay, I'm sorry to be so rude, but I told you 4 times. Upstart is a no. Can you buy a covered call on Thinkorswim as an example, step by step, please? Fab, how are you? Let's do that. Let's find a good one. How about Home Depot? Let's see what Home Depot looks like. HD. Home Depot. Nope, Home Depot is a no. See? Look. Your high right there. I don't like buying at the high. Now, see where it did? It came down. Then it went up. It came down. Then it went up. So Home Depot at this moment in time, it joins the ranks of see you in 2 weeks. So I'm actually writing Home Depot for the next 2 weeks. It's already on my list for 2 weeks. Okay, so we're going to look at Home Depot again in 2 weeks. But what's on the list for this week? LUV is. Nah, hasn't made its turn yet. Hold on. Nike. Ooh, yeah, take a look at that. Very first thing you want to see, the chart. High, low, where was it? Where is it? Where is it currently going? See that downturn? But look at right here. Okay, here's the bottom right here, the bottom of the year. She's bouncing off the bottom. She made a little bit of a high there. Now we have some profit taking a look right there. That's what I want to see. So let's zoom into that, and I'm going to do a full trade so you can actually see how it works. All right, first off, 79.01. So I can buy it at 79.15. Okay, the 79s are going for $1.07. If I take the 15 cents off of there, well then I'm still walking away with over 90 cents. 90 cents on a $70 stock is over 1%. Is that all we are talking about? Nothing else? I want to know if it's a good buy or not. You know what? If you want to buy it, that's up to you. But to me, it's a no. And I don't understand why you're not understanding. Because this is my show. This is what I do. You're asking my opinion. My opinion on a stock that doesn't pay a dividend is a no. And I don't understand why you're not understanding it. And I honestly don't care about the Fed cuts. I really don't. Yeah, thanks for that. All right, so let's take a look at Nike. Because so far, the numbers work. Great. Now I want to check out the chart. Is it the right time? Okay, so here we go. A year ago, we're at 97.37. We topped out in December at 123. Okay, we bottomed out on the, actually we have a double bottom. Check that out. We got a double bottom, the 25th of July, 70.91, the 5th of August, 70.75. Okay, that's lower. All right, 70.75 in August. See that? Up, down, up. What? Down, up, down, up, down. Now we have 2 days to the upside. This is what I call a perfect position. For me, I'm not telling you guys, this is the perfect position for me. So I'm liking what I'm seeing here so far. Now, I'm not, this is not advice. This is not any way, shape, or form for you to buy it. I'm just showing you how I look at it and what I am going to do. Okay, so she went up, she pulled back, had the new bottom right there. Now she's going to the upside. The last 30 days would be the 15th right there. Looks totally different from the last 30 days. See? Up, down, now she's going back up again. I got a couple questions on YouTube. You guys got to give me better questions. All right. I like stocks over crypto, and I don't even get rude, though I could use about 15x a week. Yeah. Okay. So anyway, I like Nike at 79. I made my decision. Great. Now let's actually do the trade. Let's get rid of this. Okay. Now, I want to change this over here where it says single, because single just tells me the value of the option itself, by itself. Now I want to couple it along with a covered call because things are going to change. You ready? Oh, it changed. So, like I said, I like the 79. Here's the strike prices over here. The 79 is right there, so I want to come over there and I want to buy. See where it says right there, buy? So I want to buy that. And the order comes up, right? I'm going to buy 1,000 shares of Nike at this price. Okay? I am going to sell 10 contracts of Nike, 20 September 24th, that's this coming Friday, and the $79 call strike. It automatically fills by itself. All right? Now, I want to hit confirm and send. Now, here's the order. Now, I always tell everybody, read it out loud. Because, yeah, I saw it. I know what I want to do. Okay, that's my eyes and my little fingers. Eye-hand coordination. Great, fine. But I've lost plenty of money by hitting the wrong button. So I tell people, read it out loud, make sure it sounds right. I'm going to buy 10 covered calls of Nike, 20 September 24. That's this coming Friday. Okay, so I'm going to buy the stock, I'm going to sell the option, and the option is going to expire on the 20th, which is this Friday. Okay, Nike is the price, limit order to open to open. The reason it says to open, I'm opening two orders. I'm opening a stock order, and I'm opening an option order to open to open. Okay, so next is the break even. Well, worst case scenario, if it goes down, is my break even. It's at 77.92. Well, if the stock closes on Friday above 77.92, well, I'm profitable. That's it. Right now, it's at 79.15, and it's going to the upside because it's bouncing off the 30-day bond, going up. Well, now it's at 79.15. If I do this trade right here, my break even is 77.92, which is a lot lower. Okay, so if it goes up, I make my money. Stays the same, make my money. Goes down a little bit, still making money. That's what I like. Okay, so the maximum profit on this particular trade, $1,080. All right, that's the profit. It's all. See, when I say simple, predictable, and consistent, well, I already know what the trade's going to be, and we're not even here Monday yet. So if I put this order in for tomorrow morning, it will fill automatically. It means first thing in the morning, I will buy 1,000 shares, and then a couple of seconds later, I will sell a covered call against it, which means I will get that $1,080 in my account first thing tomorrow morning. What is it costing me? So let's break up the calculator so you can see exactly what we're making off of this deal. Okay? And this is why I say predictability and consistency. I want to know what I'm doing before I do it. Okay, so the profit, $1,080, I divide that by the purchase price. How much money do I have up for this deal? Well, this one is going to be $77,926. 77,926, and that gives me a grand total of 1.38%. That's 1.38%. Now, I always say it out loud so that it makes sense and you know that your eyes and your hands did the exact same thing as you wanted it to. Because I think 4 times this year, I've been trading for 20 years. 4 times this year, I made 4 mistakes. Okay? And there's a lot of people in the audience that that are part of my morning trading group. And they say, oh, damn it, I hit the wrong button. It happens. Okay? I've been trading for 20 years, and every once in a while, I do hit the wrong button. All right. Let's get out of there. 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 And let's get out of there. All right. So that was a sample trade for Nike. I like Nike. 1.38%. I'm only looking for 1%. 1.38. Well, that's a little bit of a bonus. Because I don't do the 1% every single week, even though I try. Okay, so let's go here. For those of you that are new here that haven't seen this yet, here at the 10-Minute Trader, that's my website. Okay, you can actually do a Google search and say who owns that 10-Minute Trader and how long has it been around. I've owned this website for about 20 years. All right, here's every single one of my trades. Okay, and here's the interest rate. Okay, so here, week number 19, 1.24%. Okay, week number 20, 0.7. See, I didn't get 1% that week. Okay, week 21, 1.2%. Week 22, 0.6. Okay? 0.6, 0.6, negative 0.15. Okay? 1.5, 3.3, so on and so forth. What is that? 5.2, 2.6, 3.3. It averages out to over 1%. So at the end of the year, where we are currently right now, well, I'm currently up over 50% in this account, over 70% in that account, and up over 10% in that account, because that account's been down for 3 months. Okay, so it is over 1% per week. What stocks are we talking about? Hey, Sam, how are you? Well, Sam, we were talking about, what were we talking about? Nike. Nike, if you like Nike. All right, can you look at Upstart? Been asking since last night. No. Pfizer. PFE. I like Pfizer. Why do... Hold that thought. Why do you only consider yield and not total return? What do you think of Piton? Piton doesn't have 20 years of increased dividends, dude. It's going to be a no. Sorry. I'm 19 and have VOO, SCYH, VLM. Is that good? No, no, and no. But that's my opinion. All right? You need to take a look. I love math. I love meth. Holy shit. You need to take a look at all the details. Okay, hold on a second. VOO. Okay? Those are the dividends. Not consistent with the dividends. So, what time do you go to sleep? I go to sleep around midnight or 1 or 2, depends. Alright, I love meth. You like VOO. VOO is currently giving you a 1.28% per year. 1.28% per year. Now, just for the fun of it, let's go to Google and put in the Google search. What is the inflation rate? 2.89. That bunch of bullshit. Okay? Okay, you can't tell me that's bullshit, 2.89%. Okay, so I used to go to the dollar store. Okay, the dollar store is $1. Now it's $1.25. That's a 25% increase. This is bullshit. Okay, Walmart, they used to have these Coke machines out front. You can buy a soda for 50 cents. Well, now it's 75 cents. That's not 2.89%. That's a 50% increase. Bullshit. Okay, 5 years ago, gasoline was under $2. Well, now it's over 3. That's not 2.89. Anyway, what I'm getting at, I love meth. What I'm getting at, the numbers, you're looking to get your yield. You're putting your money into those companies, and they're paying you 1.28%. So that's $10 for every 1,000 you put in. I hear questions on YouTube. All right. Can you show the video when you were 26 ago? Yeah. No. That was 12 years ago, and I was in my 40s. Again, who will win? Don't really care. Was thinking that your 1% a week must cost you money after inflation and taxes. All right. Inflation, all right, we just did the inflation thing. Okay, that's a bunch of bullshit, what they're saying. Because, you know, if a dozen of eggs was $1.79, 4 years ago, and now it's like $6, that's not a 2.89% increase. Terribly sorry. They're freaking lying to us. But what I am saying, anytime you buy something, you invest, make an investment. You're 19 years old, okay? You ever hear of the rule of 72? The rule of 72. 1.28 divided by 72. Oops, wrong way. 72 divided by 1.28. There we go. Okay. Now, the rule of 72, that doesn't seem right. Okay. The rule of 72 tells you whatever interest rate you're looking at, 1.28. It tells you how many years it's going to take for you to double your money. 56 and a quarter years. 56 years to double your money in VOO. And you think that's good? Think about it. VOO, it's going to take you 56 years to double your money. Now, let's clear that out. 72 divided by, 0.5, clear. 0.5. That ain't freaking right. Anyway, yeah, to double your money at 50% a year. Vanessa, how are you doing? You want to co-host? Vanessa, you got to send me your phone number first. We'll have a conversation. We'll talk. And if you can contribute in a positive manner to the conversation, then yes. Other than that, I'm going to politely say sorry. All right. Okay, Sean, why do you only consider yield and not total return? Okay, that's a good question. That is a good question, because your yield is what you're getting for your money. All right, if you're investing this money, that's what you're getting. 19%. Okay, but still, even at the total daily total return at 19%, that still doesn't come close to 50%. All right, buddy, James, what are your top 3 I don't make any suggestions. Sorry. How about Sigma? Never even heard of Sigma. So usually, if I've never heard of something, it's probably not going to fit. Sigma. Okay, so here's an interesting scenario. Now, with a company, I have no idea what it is. All right, see, I typed in Sigma right here. Okay, we got Sigma, which is CGML. We got Sigma, which is CGMA. We got Sigma, which is CGGF. Then we have Sigma, which is SCHTPY. These are all Sigma stocks. So you're not giving me something that I can work with, because Sigma to me means absolutely nothing. Andrea, how are you tonight? Yay, Andrea's here. Okay, CRISPR. What the heck is CRISPR? Okay, why do you not consider the yield not total return? Okay, good question. It is a good question. Dina, how are you? You need help to start. Mr. Gonzalez, just keep on showing up. Keep on showing up. Keep on asking questions. Download any paper trading account and just paper trade for a while. Get good at it. Know what it is you're looking for. It's a genre editing company, a gene editing company. Okay, does it have 20 years of increased dividends and weekly options? I don't think so, because I've been doing this long enough. I know almost everyone. Okay, Alex, you just asked me about Sigma stock. Okay, I put Sigma in right here. Okay, and I got 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 different stock symbols. You got to give me the stock symbol. I feel like my neighbor mate would be 1%. Okay. All right. How about 6? Okay. What if the increased dividends every year, we need 1 to 2 years decrease in between? All right, Darbenley. Every year, the Dividend Kings list gets updated. Okay, so right now there's 54 companies that have increased for more than 5 decades. 3M was taken off the list. 3M actually increased its dividends for 62 consecutive years. 62 years of increased dividends. This year the CEO decided not to increase the dividends, and now 3M is taken off the Dividend Kings list. Every year the Dividend Kings list gets changed. So next year, in January, we will download Dividend Kings list 2025. Dividend Aristocrats list 2025. Yeah, it changes all the time. He's talking about Sigma crypto. Yeah, it's going to be a no. No, he's saying Sigma stock. Okay, you're over here on YouTube. He's over here on TikTok. 3M needs to get out of Minnesota before they wreck them too. Okay, sorry, I can't tell. I don't do corporate crap. No. Where am I from? I'm from my mother. I'm from the Boston area. Let's take a gander at Shell. Ooh, I like Shell. SCH. Wow. Now that's a tough one too. Alright, here we are with Shell. Okay, very first thing I want to see, there's the high, here's the low, here's where it was, here's where it is, here's the direction it's going. Okay, it's currently at 67.60, so the 68s are going for 40 cents, and I'm going to say no, because it's less than 1%. I like Shell, I do, but not for this week. Queen J, James, what do you think about open? It's better than closed. I'm on both. I like TikTok and YouTube. Hey, I don't blame you. Immortal, VTI, no. VOO, no. Spider, no. Have 20%, 27% 1 year total return for the past 12 months. Whoop-de-doo. Economic Ninja is a jabroni, okay. Okay, so Immortal, you like VTI, VOO, and SPY. Great. You do your 27%. I'll do my 50%. I don't tell people what to do. Okay, you're here on my show. I'm telling you what I do. I honestly really don't care about VTI, VOO, SPY. They get 27%. Great, fine, dandy. I just sold Taco Bell shares. Nike, hope you're right. Glorio, how are you, Glorio, over there? Let's go back to here. Okay, so here's VOO. Okay, so VOO, you're actually incorrect, Immortal. It says right here, VOO is 19% year to date. Right? Year to date, 19%, not 27. Okay, get your facts right. Has a yield of 1.28. Wonderful, joyful, delightful. All those nice, lovely words. So let's take a look at their dividends. Okay, now, Max, here we go. So, number one, they've only had dividends for 14 years. You want to do that? More power to you. I like 20 years of consistent increase. Consistent increases. 56 cents. 53. That's going backwards in case you missed your math class. So from 56 to 53 is going backwards. 54, 57, 58. Nice, it's going up. 50, 69, 57. That's going backwards. Okay, that's 64. 64, 74, 79, 91, 78. Backwards again. 81, 88, 98, 90. Backwards again. So it goes up, it goes down, it goes up, it goes down. There's no consistency with the increasing on their dividends. If you want to invest in a company like that, hey, more power to you. I shared a bunch of crypto, blah, 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 blah. Okay, good for you. And you keep looking at all of them. Okay, 101, 118, 118, 108, decreased by over 10%. 116, 121, 129, 146, 139, decreased again. 130, 143, 118, decreased again. You do whatever the hell you want. Seriously, any one of you guys, do whatever you feel is great for you. If you want to invest into a company that goes up and down, up and down, up and down, hey, more power to you. I like consistency. I like predictability. I like things that are consistent. I like safety, simplicity, consistency, and I don't like to lose. So you can like them all you want, and you can disagree with me all you want. You do what you think is right for you. I like a simple, consistent, predictable 1% per week. And just because you think VTI, VOO, and SPY are fun for you, fine. You invest in them. Okay, you tried mine on Kohl's and Macy's, but lost your shirt on MPW and Marathon. Okay. MPW. MPW. So MPW at this moment, way over here, I am up 2,500 for the year. Macy's, I'm up 18,000 for the year. What was the other one you said you lost money on? Marathon. Marathon's not in this account. Oh, I don't have the other accounts open today. But I don't know how you're losing money. Okay? You're doing something incorrectly, in my humble opinion. So if you buy a stock and you sell an option against it and it goes against you and you sell for a loss, well, that's on you. Okay? So think of it this way, because apparently you missed rule number 2. Rule number 1 is never buy something you don't understand. Well, I understand Kohl's, I understand Macy's, I understand MPW, and I understand Marathon. Okay? I don't sell at a loss. You did, that's on you. That's not on me. Okay? What website is this? It's not a website. This is Thinkorswim. It's a trading platform which you can. Big Pasta wants to take a look at NLY. NLY. Nelly. We'll take a look at Nelly in a minute. What website is that? Darbenly. What if even the increased dividends every year? Okay, Darbenly, you're missing something. The list of stocks upgrade every single year. Okay? This is not like, set it and forget it. You buy this and it goes up and gives you weekly cash. It doesn't work that way. You actually got to put some effort into it. You do. Right? Happy Sunday! Alright. Ooh, Rich Bruin wants to take a look at U.S. Steel. Alright. U.S. Steel. High? Low? Where was it? Where is it? What direction is it going? Look at that big, huge jump. U.S. Steel is going to be a no this week. For me. Because it jumped too much. Does anyone need proper guide on how to start investing? He's losing because 1% gain. Whatever. Let's keep on going. I actually love watching your live videos. Well, thank you. Gen XXXXX 67 64, dude, yay! Alright, how long would you stay in? Oh, that's a good question. Here's the thing. When I buy, okay, if I buy it at 36.16, the closest one's going to be the 36s. That's paying $1. Okay, $36 stock and it's paying $1. Well, that's close to a 3% return. But here's the thing. Look at the chart. Okay, it looks interesting. But let's zoom into this area right here. The last 30 days. Okay, here's our 30-day high at 40. What is that? 42.78. Okay, 42.78 the high. Here's the bottom right here. And the bottom is at 26. Goes from 42 to 26. Okay, now it's at 36. It's up $10. See, the bottom is at 26. Now we're at 36. That's a $10 increase. A $10 increase on a $26 stock is about 35% maybe. So you go from here to here. That's a 35% increase. Well, yeah, there's going to be profit taken. How much? I don't know. I just closed 100% on an hour on this coin. Yeah, whatever. I don't do coins, so please stop it. Okay? If you don't stop it, I'll just block you and I don't want to hear from you again. It's that simple. I'm not here. I don't care about cryptocurrency. I don't care about Forex. I don't care about futures. Okay? I'm retired. I'm not into gambling. Okay? Gambling for Forex and cryptocurrency is gambling. Candlestick Jimmy. All right. So anyway, I like U.S. Steel. I do. But look at it's going up. There's still more space to go up to get to the high. Okay, fine. But it's still up 35%. when you make a profit, you buy low and you sell high. Well, it's up 35% already. How much higher do you think it's going to go before a whole bunch of investors say, hey, 35%, I'm taking mine? Okay, Pranav, what Chinese stocks would you buy now? None. Is SCHD smart to get into? Only if you want to give your money to a computer and tell them, say, hey, you do it for me, I'm too damn freaking lazy. Sorry, I just don't like SCHD. SCHD. Okay. Number one, it's a monthly. Number two, look at the dividends. Okay. 2011, 13 years. 12, 14, 21, 26, 20 backwards, 23, 26, 25, 27, 25 backwards, 28, 27, 31, 30, 27 backwards again. Yeah, this one's up and down also. Okay? That's up and down also. Look at the summary. Okay? What are they actually giving you? Okay? 3.35% yield. That means you buy the stock and you get a 3% return on your money. Okay, it's up 11% for the year. Whoopie deal. All right. Top M, I don't give advice. Okay, I showed you the numbers. It's up to you to do your own research. It's up to you to decide whether or not you like Nike. Okay, I showed you the numbers. 1.38% for Nike for this week. If you like Nike. Rule number one, never buy something you do not understand. Rule number two, never sell at a loss. If you like Nike, fine, but that's up to you. You got to figure it out. I can't tell you what to do. Okay, so to answer your question, no, I don't like SCHD. Okay, you're giving your money to a computer and say, hey, I'm too damn lazy to do it. You do it for me. I'm showing you how to get a safe, simple, predictable 1% per week. That's over 50% per year, but you actually got to do some of the work yourself. Find a good company, buy it. Collect the premium, great. 1%, wonderful. Do it again Monday. All right. Wait for the list for next week. Yeah, I'm still waiting for it. Dell. Ooh, Dina wants to take a look at Dell. D-E-L. Dell. High, low. Where was it? Where is it? What direction is it going? Okay, it's at 114 at the moment. 114.45. The 115s are going for 244. Well, that's close to 2%. 2% on Dell. Now, I grew up in the 60s, 70s, and 80s. I've seen Dell start from nothing and become something. So look here. It was in the 60s a year ago. It jumped up to 180. That's a 300% increase. 300% increase in 9 months. Okay, great. Well then, from June until August, it dropped 50%. Okay? Now it's up to 114, and 114 is $24. $24 on a $9 stock, on a $90 stock, 26, 27%, something like that. Okay, but look, a year ago it increased 300%. Now it dropped 50%. Now it's up 25%. 25%. There's still going to be profit taking. But the question is, do you like Dell? All right. The last 30 days for Dell, what does it look like? Here we go. Look, totally different. Okay, 30 days ago, 106. Jumped up to 118, dropped down to 102. Now we're at 114. Does it look like it's going to continue to go up? Well, there's a lot more space in the bottom than it is up there. So from 102 to 114, that's $12. That's over 10%. Okay? It's not always the numbers. It's percentages. If it goes up 10%, yeah, I'm taking my profits. I take profits after 5%. So at 10%, hell yeah, I take profits. So the 114s are going for 289. That's more than 2%. The 115s are going for 244. That's more than 2%. You got to decide which one do you like. They also go sideways. No, Flipper, they don't. They look. Okay, this is not going sideways. This is called channeling. There's a difference. Because look, it went up, it went down. It went up, it went down. It went up, it went down. There's no place here whatsoever showing it going sideways. And they call that a doji, where it opens and closes at the exact same place. 86 is here. Woohoo! I wait for the list for next week. Wait for the list for next week. Yep, that's still coming eventually. Uh-oh, I'm missing all these questions. What if Nike stock drops in price? All right, Fab, I hear what you're saying. Do you remember rule number 1? Never buy something you don't understand. Okay? I'm going to give you another way of looking at it. Never buy something that you do not plan on holding on to for a long period of time. Big Pasta, Disney, huh? We'll take a look at Disney. All right, if I get time to, we'll take a look at Disney. What time is it? It's 10:30. All right, we got 1 hour to go. I'm feeling pretty good, which is a good thing. VOO is up 400% in 14 years. That's 14 times my money. Okay. Hayden, how are you today? So I love it when people give me this crap. All right, so here we go. We're going to go here. We're going to go to what I call a compound interest calculator. Okay? Okay, Hayden, are you paying attention? Weekly compound interest calculator. All right, so let's start out with $1,000. Okay, simple number. Let's get no deposits whatsoever. Let's keep it at just 1% per week. Okay? Now, 14 years. Okay? Now, you're up 400% in 14 years. That's four times your money. Awesome. So we're taking a weekly compound interest calculator, taking $1,000. Oh, you know what? Let's make it a little easier. Let's make it $1. Makes the math easier, right? Nah, that's stupid. Let's do $1,000. Okay. $100. Okay. So $100 compounded weekly, 1% for 14 years. Okay. Do you see what the ending balance is? Total interest earned, $139,845. So, at 1% a week for 14 years comes out to almost $140,000. Okay, so let's do a little math on that. Okay, take a regular calculator, not a compound interest calculator, and we're going to take $139,845, and we're going to divide it by the purchase price, which is $100. So that is 1,398%. Now explain to me why you think 400% is better than 1,398%. I'm just curious. So yeah, VOO is up 400% in 14 years. But compounding 1% per year for 14 years, that's 1,400%. So I'm glad you like VOO. More power to you. But please, don't talk to me about numbers. All right? I'm really, really good with numbers. Okay? I know what 1% of $100 is. Almost $1. Well, you compound that every single week after week after week after week after week for 14 years. Yeah, not even close, dude. Not even close. All right, Brian, are you looking at charts tonight? Anything that's on your watch list for this week or next? Yeah, absolutely, Brian. That's why we're here. Okay, so Uh-oh. Okay, so Hayden, I hope hope that makes sense to you. Would you go over 0-day call strategies? No. Sorry. Will you buy Bitcoin? No. No, I shouldn't say that. I will buy Bitcoin when it becomes legal tender. Do you know what that means? That means I can go to Starbucks and buy a cup of coffee with my Bitcoin. All right, Haas and Pfeffer, Shell. Did we ever look at Shell? Okay, Shell. Here's our high, here's our low, here's what it was, here's where it is, 67.45, 67.60. You're looking at the 68. The 68 is going for 40 cents. That's less than 1%. There are too many other companies that give more than 1%. Haas and Pfeffer, if you like it, more power to you. It just doesn't work for me. And that's covered calls on dividend stocks. Thanks, 86. Starbuckies. Ooh, we have. Wait a minute. Did we look at Starbucks yesterday? SBUX. And here we go. High, low, where was it? Where is it? What direction is it going? It's currently at 1857, the 1860s, the 9860s, so the 99s are going for 109. So we get you 1% there. Cool, like it. Now let's take a deeper look. A year ago, we were at 97. Well, currently we're at 98. A year ago at 97, we're at 98 now. Big deal. She went up, she came down, she went up again. Now, you see all this right here? All this in 5 or 10 years is not going to mean anything. Because when they look at 2024, okay, 2024, great. It was at 97. That's it. 97 a year ago, 98 now. So for the whole year, they're giving us two numbers, 97 and 98. They're not going to worry about this crap, all the movement. All right, so Starbucks. Let's take a look at Starbucks. We topped out in November at 107. Bottomed out in May at 71. Okay, last 30 days, right there. Here we go. Okay, last 30 days. 30 days ago at 94. We dropped, retraced, dropped, retraced. What do you think is going to happen now? Take a look at the chart. They tell you what's going to happen. Okay, there's your high. Now she's going to come back down again. So Starbucks looks like it's going to be good in 3 weeks. So we'll look Starbucks down in 3 weeks from today. And it's already written down for 3 weeks for today. Haas and Pfeffer. I like Halliburton. I actually have some Halliburton. So let's take a look at Halliburton. H-A-L. Okay. High, low. Where was it? Where is it? What direction is it going? It's currently at 28.87. So we'll be looking at the 28s, and those are going for 38 cents. That's 1.5%. It's going to consolidate next week. Sorry you asked. I thought, there you go. It's your opinion. Cool beans. All right, so I like the numbers. The chart, well, what is the chart telling me? High, low, all that kind of stuff. We already looked at that. Okay, we have a high last year, 43.85. Last 30 days. Okay, now take a look at this. Okay, 30 days ago we're at 31.40. Our high is 32.50. Our bottom is 27.50. So Thursday and Friday are up higher than the bottom on Wednesday. I bought shares of Halliburton. Like the value for a long. Yeah, I don't do long term. The longest I've ever held anything is 9 months. Okay, I am not a buy and hold kind of guy, because there's not a single stock that I like that I want to hold on to, because I need cash flow. Being retired, okay, when you're retired, you have X amount of dollars. Nothing is coming in unless it's invested. Okay, I'm not relying on Social Security, because that's basically useless to me. I was self-employed most of the years, and I didn't pay taxes. The reason why I didn't pay taxes, because of my tax planner planned out my strategy to a way where I don't have to pay taxes. All right, so next, here we go. PSX. What the heck is PSX? Oh, PSX is Phillips 66. Hold on a second. PSX. Phillips 66. Yeah, okay, cool. High, low, where was it, where is it, what direction it's going? Cool, I like this right here. You can't see it there, but if you're on YouTube, this screen is live on YouTube. So you may not be able to see all these little things I'm pointing at, but if you're on YouTube, you can see it. See, look at this little area right here on the chart. All right, so before we go deeper into the chart, well, let's look at the numbers. It's currently at 127.97, so the closest one's going to be the 128. It's only paying 120 to 130, so there's a slight chance you can get your 1%. Not definite, but slight. Okay, so last 30 days. And this is what I like to see. 30 days ago, we're at 139. We dropped, went up to 141. That's our high. And we dropped to 124, which is a $20 drop. $20 drop on a $140 stock is over 10%. Okay, so here's our 30-day bottom on Wednesday. Thursday was an update. Friday was an update. So what does that tell me? That tells me I like that idea. I want to jump in. I want to take a look. That's me. Okay, but the 128s, wait a second. Yeah, 127 should be at 127. Yeah, because the last traded price is 126. Okay, so currently it should be hypothetically 127, which is 165, which does work. So tomorrow morning, when it opens, okay, Tom Powell, it's very important for you to make sure the numbers work. Okay, because we see where the chart is. Okay, our 30-day bottom was on Thursday. Friday was an update. Wait a minute, sorry. Our 30-day bottom was Wednesday, right here. Okay. Okay, here's our 30-day bottom Wednesday. Okay, and that was 123.77. Okay, now we're sitting at 126. 2 days to the upside. Great. So, first thing tomorrow morning, when the market opens, all these numbers are going to change. But the math stays the same. The purchase price, strike price, bid price. Right? What am I buying it for? What am I selling it for? What am I collecting? Okay, is what I'm collecting more than 1%? Okay, I have 300 stocks that I look at. All I need is 2 or 3 every week. Okay, so every week, now right at this moment in time, I have 5 companies. I have 5. Albemarle, Kohl's, MPW, Walgreens, and Wynn. Okay? And in this particular account, remember I said I share 3 accounts with you guys? So tomorrow morning, we'll be taking a look at all 3 for those of you that are in the morning trading group. It's not open for everyone. Skeeter, what are we talking about today? Well, we were just taking a look at Phillips 66. But they are great dividends. What am I missing? Walgreens is extremely cheap. You're right, Big Pasta. All right, Chet. Chet, but they are great dividends. What am I missing? Chet, what are you talking about? What is anybody know what Chet is talking about? I'm going backwards, taking a look at all these questions and see what Chet is talking about. Because I don't see him making any suggestions whatsoever. Because we're looking at Starbucks, Halliburton, PSX, and he says, but they are great dividends. What am I missing? I can explain what you're missing if I knew what you were talking about. What are we talking about today? ET has a great dividend. Enron, lovely. I subscribed and liked the live. Thanks, James. Hey, Big Pasta, you're back again. Now, I've noticed you've been here once or twice before because Big Pasta is a good name, and I love pasta. Did you take risks in your youth? I feel like I've invested millions with this 1% strategy to cover the bills. Alrighty then. Yeah, I was an interesting fellow when I was younger. All right, so let's take a look at Energy Transfer because apparently somebody likes Energy Transfer. All right, so Energy Transfer. There's the chart. High, low. Where was it? Where is it? What direction it's going? Cool. Hit that button. Currently at 16.16. The 16s are going for 22. You take 16 cents off it, and it's not worth it. Sorry, I like Energy Transfer. Don't get me wrong. I like Energy Transfer, but this week the numbers just don't work. Sorry. And if you want to buy Energy Transfer, hold on to it long term. Hey, that's up to you. I don't do that. I buy it, I sell a covered call against it, I collect my 1%. Thank you very much, and I'll see you next week. Basically, it's it. Gordon Gekko. Yeah, this is not good enough for Gordon. This would be too slow for him. Mara, there goes the neighborhood. Let's take a look at Marathon, because apparently Hassan Pfeffer doesn't like it. Okay, so Marathon, here we go. Here's our high, here's our low, here's where it was, here's where we are. Ooh, I like that movement right there. 1612, 1634, the 1650s, 57 cents. That's close to 3%, isn't it? Well, let's take a little deeper dive. A year ago, Marathon's at 10, bottomed out at 7, topped out at 34. Do you see that? 7 is the bottom, 34 is the high. That's a 400% increase in 1 year. Okay, so it goes to 34 and drops all the way down to, was that 13? All right, well, let's take a gander. Here we go. 30 days ago, we're at 15. Jumps up to 1870, drops all the way down to 13. Now we're up to 16. Look at that movement. Up, down, up. Now, you can call it whatever you want, okay? She goes from here, which is 15, up to 18. Now, that's only a $3 increase. It's only a $3 increase from 15 to 18. But what you're missing is a $3 increase on a $15 stock is a 20% move. Where can you get a 20% return in 2 weeks? Okay, here's your bottom, here's your top. That's 20%. You buy it at the bottom, you sell it at the top, well, there's your 20%. Okay, so it goes from 18, almost 19, and it drops down to 13. Well, that's a $6 drop. $6 on an $18 stock, well, that's a 30%. So she goes up 20%, goes down 30%. Now from 13 to 16, that's $3. That's almost 25%. You don't look at the dollar figures because they are what they are. What is that? $3? Big deal. What is this? $6? Whoopie-doo. This is another $3? Yeah, big deal. No, it doesn't work that way. 30% increase, 50% decrease, 20% increase. Just take a look at the numbers. The percentages, not the actual dollar figures. Because if you're getting a 20% increase in a week, well, hell yeah, thank you very much. And then it drops from here down to here, which is a 30% decrease. Then, yeah, take a look at the numbers. My apologies, what stock is this? This is Marathon, right? So, if you like Marathon at 16, the 1650s are going for 57 cents. So 1650, 1650s, 33. Well, that's 2%. It's close to 13. It's close to 3%. Nathaniel, how you doing? All right, Richie wants to take a look at Riley. All right, Riley. R-I-L-Y. R-I-L-Y. Try it again. And here we go. Hey, Riley. Here's our high, here's our low, here's where it was, here's where it is. Look at this nice channel right there. That looks nice. Okay, currently at 606, 630 to 650s are going for 30 cents. That's a 5% increase. Well, I like Riley for tomorrow morning. I'm going to write that down. R-I-L-Y, Riley. Doc, what do you think about Riley tomorrow morning? I like it. Okay, so currently 606, let's zoom in and find out exactly what we think it's going to do. Okay, so last year we're at 45.93. How would you feel if you had it at 45.93 and now it's at 6? This is why I don't hold on to stocks. Oh, shoot, looks nice. I would have bought it. Okay, whatever. All right. So anyway, there's the high at 45. Here's the bottom. Okay. All right, here's the bottom on the 15th, which was 30 days ago. Okay? Here's your bottom right there. bottomed out at $4.51. Can you imagine it going from $45 down to $4.50? That's horrible. Anyway, she dropped, went up. There's your high at 9. And then drop back down again here. But now she's to the upside here. Could it continue to go up? Don't know. We'll find out where she opens up tomorrow morning. But at 6:06, it's currently going for 6.30. And the 650s are going for 30 cents a share. But look at this. The 6 put is going for 55. Ooh, I like that one. All right, anyway, let's continue. All right, we already looked at Starbucks. Sorry, Nathaniel. Sorry about that. Yep. I'm down 39% for the month. Oh, I feel bad for you. I'm up quite a bit for the month. All right. Dina, we already looked at Dell. Coop. Tom, you want to look at Coop? I don't even know what Coop is, so more than likely it's going to be a no. And it is a no. Sorry. Monthly. I don't like monthlies, and numbers just don't work. Please don't get me started on it. They just trust me when I say the numbers just don't work for me with monthlies. I only like weeklies. Okay? And I'm terribly sorry. If you like Coop, more power to you. You're in the wrong place. I don't do monthlies. They just don't work for me. Tom, is that what he refers to from rule number 2? Rule number 2 is never sell at a loss. That's rule number 2. What stock should I unload on? All right, low up. I can't give you. I can't give you any advice. I know nothing at all about you. If you really want my advice, if you any guys want to talk to me, ask my opinion. DM me with your phone number. Take Nathaniel. Sorry, the Qs, they just don't work. The Qs, in my humble opinion, Nathaniel, are for people who don't want to take responsibility for their own money. It's like, hey, here's my money. You do it. I don't want to do it. Give me whatever you think. Because if you take a look at the Qs, here we go. Qs. 1, 2, 3. Okay? The Qs are giving a yield of 0.61. That's just over 0.5% for the year. You put your money into the Qs, you get 0.5%. Lovely. What is it up for the year so far? It's up 16% for the year so far. I asked about Nike 4 times, but you didn't answer. I bought it blindly anyway. Okay. I'm not quite sure what you're talking about. Because at this moment in time, the market is closed, so I'm not seeing how you actually bought Nike at the moment. Okay? And I did answer that. We took a look at Nike. We looked at all the numbers. I gave my opinion. If you weren't paying attention, I can't help you out with that. And I don't remember what my opinion on Nike was. NKE. Okay, whoops. Okay, here's Nike. Okay, 30-day high right there. Here's your 30-day bottom. 2 days the upside. The 79 is going for $7.15. The 79 is going for $1. That's over 1%. That's my opinion on Nike. Okay, all the numbers look good on Nike, and it's giving over 1%. Milton, you bought your covered call stock. What do you do when the stock price goes down? Is there a defense? Are you still teaching us gambling, sir? I am. Isn't that so nice of me? It's not gambling. Gambling is totally different. Okay. Milton. Okay. Milton, I'm going to say something extremely blunt to you. All right? You're going to buy a stock. It's going to go down. Face the facts. Also, you're going to buy a stock. It's going to go up. Lovely. It's part of the game. Stocks go up. Stocks go down. That's all they do. They do not come to your house. They do not wash your dishes. They do not babysit. They do not change a tire. They go up, they go down. That is it. You're going to buy something, it's going to fall. You're going to buy something, it's going to go up. NVIDIA is a big fat no. The reason why NVIDIA is a big fat no, number one, it was $1,200 a couple of weeks ago. They did a 10-to-1 split, now it's $120. Fine, lovely. What's the book value on NVIDIA? $2 a share. No, thank you. All right? What is the dividend on NVIDIA? 1 penny. Yep, seriously, 1 penny. You're buying a stock for $120 and they're giving you 1 penny per quarter. That's 4 cents a year. Yeah, no thanks. Okay, $5 on a stock of your choice. Woohoo! Johnny, tell him what he's won. All right. Anyway, I can't help you out with that one. Jerry, have you had any new thoughts on Walgreens? Hey, Jerry. Jerry, you're here every night, okay? We talked about Walgreens on Friday. We talked about Walgreens on Saturday. What makes you think that my thoughts on Walgreens is going to change today? Because Friday was the close of business. Saturday, nothing happened. Sunday, nothing happened. I won't know anything about Walgreens until tomorrow morning. That's it. I like Walgreens. I have no intention on selling my Walgreens. I might even buy more Walgreens. Air Lease, never heard of it. I'm up 100% in PLTR, one of the best stocks. Totally good for you. More power to you. I don't like PLTR. I don't. They don't have any dividends. I knew I shouldn't have mentioned crypto. Now not that I hate you. Okay? I have no desire of crypto. A lot of people out there making lots of money in crypto. There are a lot of people out there losing a whole shitload of crypto. I have no desire to be in that game because I can't use it to pay my bills. I can't go to the gas station and say, oh yeah, let's use some crypto to pay for my gas. Yeah, it doesn't work that way. Okay? There's no consistency, there's no predictability, and there's no regulation. Okay? I love the idea of the people's money. But until all the people can use it, it's just a pipe dream. Quarterly low, but yeah. Am I rich? Yeah, but it depends on how you look at it. How do you define rich? Okay, did you know that at $34,000 a year, you're already richer than 99% of everybody on the planet? Okay? That's the average to be in the top 1% of wage earners on the planet. It's $34,000 a year. That's it. So, but here in the United States, total different story. Yes, for growth, but not for this strategy. Yep. Yay! We're in the top 10%. Yes, we are. But what is that good? What good is that for you? Okay, we live here. You know, $34,000 doesn't really work well here. Yeah, you could have many off ramps, blah 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 blah. Cash Valley stays blah 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 blah. Okay, yeah. Sorry, I don't like it. Okay, so here's something that you crypto people don't get, and you don't understand it yet. And I understand that because crypto is still relatively new. Now you say, no, it's been around for 4 or 5 years. Yeah, it's still relatively new. Okay, so back in the 1980s, okay, 1980, I think it was 1981. I think it was. I'm not 100% sure, but they had what they called a gold rush, where gold went from like $200 to $800. And it freaking looked awesome. The chart like way up there. Looked awesome. Great. So here's the thing that a lot of you people don't seem to understand. Okay? The people who bought gold at sorry, not educated on crypto. Yeah, I get it. The people who bought gold at 850 or whatever it was back in 1981, they had to wait 30 years. That's 3 decades. 3 decades to break even. Okay, so take a look at cryptocurrency. Take a look at Bitcoin. It went from wherever the hell it went and went up to $76,000. Great. Well, at $76,000, all those people who bought it then, just for the fun of it, let's find out where it is at the moment. Okay. Currently, Bitcoin's at 58,000. Lovely. Oh, just give me a second. I'm looking for it. All right. See it right there? Bitcoin's highest price is 73,000. 73,000. Now, the people who bought gold at its peak had to wait 30 years to break even. 30 years. That's not a freaking investment. That is not an investment. You have to wait 30 years to break even. No, thank you. Bitcoin's highest was at $73,000. Okay? Now it's currently at 58. Yeah, no, thank you. No consistency, no predictability there whatsoever. All right. So totally, you like PLTR, more power to you. I don't like the company. They don't have any dividends. Okay. Now the reason why they don't have any, I want Bitcoin at 40. Yeah. So Bitcoin top house. So, yeah, woulda, coulda, shoulda. Yeah, all that kind of nice, neat, fun stuff. It just doesn't work that way. Okay, Topo, we already looked at PSX. Okay. Where do I find a company that has weekly dividends? No companies have weekly dividends. Matthew, you weren't paying attention. Okay, Matthew, when I say dividend investing for weekly cash flow, what in that sentence gives you the idea that there's companies that pay weekly dividends? Dividend investing for weekly cash flow, which means I want companies that have dividends. I want companies that have dividends that consistently increase their dividends for more than 2 decades. That means 20 years of higher and higher and higher dividends. There's about 300 companies that do that. Now, I also want weekly options because I want to buy the stock, I want to sell a weekly option against it, and collect a weekly cash flow from it. So that's where the weekly comes in, not weekly dividends. Finding the option chain, blah, blah, blah. Yep, there you go. Thank you, Redneck. Right. Timothy, please don't do the, what do you call it? Politics. No politics. Thank you. Good review of Dell. I like it, Dina. All right. Then compare dividends, okay? It's consolidate. Don't give me that consolidating crap. Please talk about, oh, I missed that one. Please talk about the service you offer from your website. Hold on a second. Also look at Bitcoins. It's always higher lows in the cycle. Never. All right, dude, please stop with the Bitcoin shit. Really? I don't do cryptocurrency. There's no consistency in it whatsoever. There's no rhyme or no reason. You got to sit in front of your computer all day. No, thank you. Okay? And I don't understand why you don't understand what no thank you means. Okay? Oh, Bank of America Darby. Give me a second. Ambev. What the heck is Ambev? Okay, so Pretam Sydney wants me to talk about the service I have. The only service I actually offer at this moment in time, I've written 13 books. They're available on what do you call it? Amazon. Eventually, I'll put them on my website so people can buy them there. Just curious, just correcting the information. This information that you said. This guy's questioning me. Also, look at the Bitcoin. It's always higher lows every cycle. Never goes lower than the previous cycle. Okay, obviously, you sell at a loss, you lose. You just need to look at the data is the problem. Not necessarily so, and you're not correcting me. It is a fact that the high is the high. You cannot argue. You cannot argue. If the high is the high at 78 or 73, whatever the hell it was, and it's currently now at 58, how do you figure? Okay, so whoever bought it at 73 or 78, whatever the hell it is, what the hell is it? No, I already deleted it. Okay, it is what it is. What I was saying, and you weren't paying attention, you were doing what called selective perception, choosing to hear what you want to hear. What I was saying in 1981, when gold hit 850 is the high that it hit. It took people 30 years to go from the high that it hit at 850 before they would break even. That means at 850 she dropped and she stayed low before she came back up to 850 again. Okay, well now it's over 2,000. Okay, great, fine. But those people who bought at 850 had to wait 3 decades. Okay? Now, when Bitcoin hit 73, yeah, you have some people buying it at 73,000 apiece. Now it's at 58. How long do they have to wait before it goes over that price? That's what I'm saying. Look at the charts, the similarity between Bitcoin and gold. Because gold back in the 80s, it went straight up. What did Bitcoin do? It went straight up. Found its top, now it's back down again. That's all I'm saying. Okay? All right. So the services on the website, yeah, I wrote a couple of books. I have a training course. I don't really push it. And I also have a morning trading group. Those are for the serious investors who want to actually watch me trade my 3 accounts. Remember, I have 6. I share 3 of them with you guys. That's it. I only share the 3. Okay, and it's all this particular strategy. I buy a good quality dividend stock. I sell a covered call against it. I bring in that 1%. I buy all my stocks on Monday. I sell the covered call on Monday. Tuesday, Wednesday, and Thursday, we just sign in and we look at where is it going. And on Friday at 3 o'clock, we jump in again because the market closes at 4 and all the options expire at 4. So we want to make sure that all of the people are making money. 74 is the high so far this cycle. We're not happy. Yeah, okay. I'm just going to ignore you for the rest of the night. I told you I don't want to talk about crypto. I don't want to talk. I honestly really don't give a flying dead rat's carcass. I don't. And I don't know why you keep bringing it up. All right. Ambev. Never heard of it. Let's take a look at it. And I can pretty much tell you it's going to be in a Bob, dude, about time you get here. 11:14. We got 16 minutes to go. All right. So let's take a look at Ambev. What should I invest $130 to? I can't answer that question. I don't know anything about you. Okay. Okay. So people ask me for advice all the time. I can't give you advice until you actually leave me your phone number. I can actually make a call. Ooh, HM. If you really want to talk to me, come on to TikTok. DM me with your phone number. I'll give you a call and we can chat. And I can give you my opinion. Okay. All right, so let's keep going where we are. Mo Tax Firm wants to take a look at Ambev. I never heard of it, and most likely, anytime I say I've never heard of it, it's going to be a no. AMBEV. Oh, look at that, it's a no. Okay, monthly optionable stock, no. Reason it's a no? It's a monthly optional stock. Numbers just don't work. Okay, the numbers just don't work with monthly optional stock. I've never got a monthly optional stock that gave me 3 to 5% for a month. Never. Okay, so no, sorry. Darbanley, Bank of America, BAC. BAC. Okay, high, low. Where was it? Where is it? What direction he's going? 38.65 to 38.60s. 38.50s are going from 62 to 39s, going to 37, just around 1%. Okay. Now, one thing I don't like about it, okay, Darbanley. Okay, you haven't been here that long, so I don't know if you've noticed this. But take a look at the numbers here for a second. The last traded price, 38.65. The current bid, 38.56. Which is lower. The current ask, 38.60, lower. So when both the bid and the ask are lower than the last traded price, yeah, the market maker is going to push that number down. So let's take a look at the last 30 days. What does that look like? Okay. 30 days ago, we're at 39. She dropped here, went up to, was that $40.90? $40.90. Here's our bottom right here at 38. Thursday and Friday were both higher, but it's still in a downward trend. Okay, even though these two are higher, look at the downward trend. Okay, lower highs and lower lows. Even though the bottom is here, lower highs, lower lows, it's still going to the downside. So it doesn't look that promising. Sorry. Is SCHD good, Jared? I already said no to SCHD this evening. That's like you giving your money to a computer. I've seen enough Terminator movies. I don't trust computers. Sorry. Do you think Big Lots stocks will recover since it filed bankruptcy? No, not really. Big Lots hasn't been around a lot. They haven't been around that long. Okay? And I don't know anything about them. Okay, so if they're not on my list, and my list consists of only companies that have consistently increased their dividends for more than 2 decades. So I don't know anything about them. What's going on here? Can you read your dividends on the option chart? Nope. Sorry. Okay, dividends are totally different than options. And you can't find dividends on an option chart. Alright. How do you play it safe? I'm not you. Cool beans. Can I start trading at 14? You can. My daughter started trading at 9. Now you have to have an adult open up the account for you and you can trade it. What's your YouTube handle? Well, my YouTube channel, if you go right up here to where it says right at the top left corner of your screen where my picture is, you click on that and that will bring you to a link that goes on my websites. Hey, I'm kind of new at it from Jamaica. Jamaica man, how are you doing? I've actually been to Jamaica a couple times. One of my favorite vacations. I was in Ocho Rio, Runaway Bay. That was a nice place. Oh, so Juan, my YouTube channel, right here. Okay, there it is. The 10-minute trader. And then I'll picture of myself. We got 2 live videos right now. You go all the way back, look at my videos. I got oldest video. It goes all the way back until 12 years.
And I'm at where the top beaches are. Now can we go? Hi, we're here at Skastiki Beach, and I am at JC. This is one of the top 10 beaches on the planet.
Wow. Yep, the 10-minute trade. That was a little princess when she was 11. Okay, I taught her to trade when she was 9. So to answer your question, my daughter trading since she was 9. She doesn't trade anymore, to be totally honest with everyone. You know, when she turned 13, she wanted to do the girly thing. You know, hair, makeup, boys, cootie. Yeah, sorry. Anyway, that being said, Philip, I was unaware makes, okay. What you to think of? More time to learn and understand. Yep, you're right. That's 10-minute trade. Thanks, Redneck. I can write you a script using AI that will use your rules and show you the stocks that meet. Hey, Seb, send me your, what do you call it? DM me with your number, I'll give you a buzz. You don't need to waste time doing this. Okay, say, Seb, the only thing, I don't consider wasting my time. I don't. Okay, I actually enjoy doing this. Okay, I actually enjoy helping people and teaching people. Show the video of when you were 29 again. I apologize. I don't have videos when I was 29. I don't. Okay, the video of me is, what, 15 years ago, or 12 years ago. And 12 years ago, I was 48. I'm 60 now, so I was 48. Yeah, 29 now. I didn't do videos back then. It's not that difficult, and you'll save them a shitload of time. Okay, well, Seb, like I said, DM me with your, what do you call that? DM me with your number, and we'll chat and see what it looks like. Jared, SCHD, no. Topal, GPC, Genuine Parts Corporation, the king of kings. GPC has been increasing its dividends for close to 7 decades. What about T-Mobile? I like T-Mobile. So anyway, I was talking about GPC. Yeah, 7 decades. Okay, 70 years of increased dividends. They're monthly options. It just doesn't work for me. I mean, monthly options. Oh, okay, I stand corrected. You don't look over 50. I hope we see the video again. Okay. What's brother? I have no idea what he's talking about. Come on, damn freaking questions. YouTube's a pain in the butt with the questions. You look like you were active in 1939. Yeah, you know what you can do. What do you think about fractional reserve banking and adult? Oh, yeah. Don't get me started on that one. Until, probably in German, okay. Until someone figures out somehow to figure the monetary mess. I mean, we don't really need the Federal Reserve. We don't. Okay? We take the money that we have, fine, keep using it, and just have someone print it and have it be a government entity. Not a foreign company that loans us money. Fuck that. Why are we borrowing money? Anyway, don't get me started with that. Alright, so let's take it. GPC is going to be a no because they're a monthly. What's your opinion on ETFs in general? ETFs are for people who don't want to do the work themselves. I don't like them. Sorry. Oh shit, we're at 58. 59. I love what you're doing and I just subscribed. Cool beans. Well, thank you kindly. How do I start? Citi. Oh, I like Citigroup. Okay. Citigroup. Here's our high. Here's our low. Here's where it was. Here's where it currently is. Look at this. It drops down there, bounces off that bottom, going to the upside. Great. I like it. 57.67 is the current price right now. So the closest one is going to be the 58. The 58 is going for 70 cents. That's over 1.5%. I like 1.5%. I could do 1.5% every freaking week and be happy. All right, so let's take a look at the chart. What does it mean? So a year ago, we're at 42.61. We bottomed out at 38.30. Topped out at 67, almost at 68. Okay, from there, the last 30 days, here we go. Take a look at this last 30 days for Citigroup. 30 days ago, we're at 60.50. Okay, up, down, up, down, up. Topped out at 62.60. And look at this. 1 week, 2 weeks, week and a half to the downside. Here's the bottom right here, 56.30. 2 days to the upside. I like that. I do. I like when she bounces your 30-day high, your 30-day bottom, now she's going up. Take a look at the numbers. Okay? From 62 to 56. That's $6. That's a 10% decrease. 10% decrease, well, yeah, people are going to jump in and it's going to start going back up again. Look at all the space between where it is now and the high. Okay, if I buy it right now at this current price, well, I'm making 70 cents per share. 70 cents per share is over 1.5%. I like 1.5%. 1.5% compounded yearly is over close to 90% for the year. I can deal with that nicely. But I have to do a little bit of work. Okay, so in the morning I'll buy that, sell this, and then boom, that's it. 15 minutes max. That's it, 15 minutes max. And you do that every single day for the whole week. Well, you get into about an hour. Now, is an hour of your time worth 1% a week? Well, it depends. Okay, one of the accounts I show you has 140,000 in it. 140,000, 1% is $1,400. $1,400 for 1 hour of work? Well, I'll say hell yeah. Now, you may not be there yet. You may have a $20,000 account. You may have a $50,000 account. You may have a $700-800 account. You have to start somewhere and slowly build up. Okay, I'm 60. I didn't think I'd get to 60. Okay, especially when I was in my 30s. In 30s, I was invincible. I could do anything. But now I'm in 60s, not quite the same. I played soccer this morning for about an hour. I had to come home and nap for 2. In my 20s, I'd play soccer for an hour. I'd go home, grab something to eat, and I'd go and I'd play again. At 60 years old, it doesn't work that way. NDSN is another good company, Nordson. But that's, again, another monthly optional stock, and that's a no. Seb makes it easier for listeners, too. Yeah. How important are premiums for option trading? Childish, it always depends on what it is you want to do. What is your strategy? What do you want to do? Okay? Make a plan, find a strategy that works, and keep at it. Trading platforms would do trades, and would the AI just pick? Yeah, I don't know. What do you think about Ben? Oh, Franklin's another good company, but again, only a monthly optional stock. All right, SCHD Jared, that's the fourth time you asked me about it, and I'm going to tell you the answer for the fourth time. No. What are you buying first thing tomorrow? Probably it's going to be Riley. Probably. Okay. All right, Jerry, this is the fifth time you've asked me this question. All right, ready? SCHD. Uh-oh. SCHD. Okay? Jared, you ready? SCHD. No. Okay? Fifth time you've asked, fifth time I told you no. Whatever-ish, I did that already. SQ short term. What the heck is SQ? SQ. Okay. Block. What the heck is SQ? Now I'm saying what the heck is SQ because I've never done it before. Okay, so let's take a look at SQ. Block. I have no idea what that means. Oh, that's Square. That's a new company. That's not going to have 20 years of dividends. What the hell are we looking at this one for? No dividends at this time. No. Sorry. There's your answer. SQ is a no. Rude Dude. Thanks, buddy. Can't wait for Monday. Have a great night. Did you research the Walgreens DOJ issue? Any concerns with that? I have no idea what that is. Andrea, you still on? Anyone see if Andrea is still on? She's the one who did the research on Walgreens. I'd like her to take a look. You know what? All right. Office of Public Affairs, United States Department of Justice. 2 days ago, Walgreens, Boots Alliance Incorporated, Walgreens together, have agreed to pay $100 million to resolve alleged violations of False Claims Act. Okay. So they got to pay a fee of $100 million. Okay. Did you skip my question, or am I shadow banned? Stinky Little Bug. Okay, that's a name I would remember. This is the first time I've seen you here. So I'm not seeing whatever question it is that you... Yeah, okay, I got that. Said the computer error. Okay, fine. Okay, so Stinky Little Bug, what was the question? Because I don't ever remember you posting a question. Okay, now I go through the questions slowly as best I can. Sometimes I miss one or two. I don't do it on purpose, and I don't have anything against you because I've never heard you before. So, what's the question? This could be the last question of the night, so ask it quick because we're past 11:30 and I only go to 11:30. Hello from Russia. Как дела, пожалуйста? How you doing over there? All right, Stinky Little Bug. I'm asking you a direct question. You asked me a question, and you asked, did I script my question? Okay, so if you're not going to answer, I'm going to sign out. All right, fine. All right, so you asked, did I skip your question? I didn't even know you posted a question. Because when I go back and forth, I don't see you asking a question. What formula do you use to find out the percentages? You've got to be kidding me. What formula do I use to find out the percentages? All right, let's find one that we have here. Okay. Well, let me show you how you find out what the percentage is. Number one, first and foremost, to find out 1%, whatever the price is, see it? 63.98, that's $63.98. You take the percentage, the point, and you move it over two places. So 63.98. Move it over to the left two places. So it should be 0.63. So 63 cents or 64 cents is 1% of $64. But how do you figure out the percentage? Well, you take what the premium is. So currently the price is $63.98, so I'm looking at the 64. So the 64 is selling for $1.59. Okay, fine. So put $1.59. Okay? Stock price, strike price, premium, $1.59. Now, you take the $1.59 and you divide it by the purchase price, $63.98. Divided by $63.98. 2.48%. That's how you figure it out. Man, a bunch of irritating visitors tonight. Yes, Rich, they are. It's Stinky Pete here. He said I banned his question or I ignored his question. I've searched and I can't find any question that he's asked. Okay? Where is Stinky Pete? Okay, so I'm going up on these questions. I don't see it. Hey, did anybody see Stinky Pete ask a question? Because I'm not seeing anything. And apparently, he's not here because he's gone. And I asked him to ask me the question, and he's just not here. All right, it's past 11:30. You guys have a great night. My throat is not as sore as it was last night or the night before. See you in the morning. All righty, so you guys have a great night. Henry Mims. How are you doing over there, Henry Mims? Sorry, I'm just getting ready to sign off. I start every night at 9 p.m. and I end at 11:30 p.m. So we are done for the night. Have a great night. If you want to show up again, I'll see you another day. Over there on Facebook, done. Instagram, bye guys. TikTok, you guys have a great day and we'll see you again tomorrow. YouTube, all y'all. Okay, so before I end for the night, you guys have a great night. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you on a ride for a safe, predictable, and consistent 1% per week. That's over 50% per year. You guys have a great night, and we'll talk to you later.